Hey everybody, today we are going to be going over the Williams percent range indicator. This is an indicator that actually has quite a few names. It's also known as the percent R, the Williams percent R. So anytime you pretty much hear percent and R together, this is likely referring to the Williams percent range. And so if you are using Optimus Flow here, this is the platform that we're using here. If you just type in percent, it will say percent Larry Williams. So Larry Williams is the person who essentially invented this indicator, so that is why it is called that on Optimus Flow. But anytime you hear percent R, percent range, Williams percent R, Williams percent range, it's all referring to the same indicator. Now, this indicator is actually very unpopular. This is something that a lot of people really don't even know it exists, and that's why it can be extremely helpful, but it's really most valuable when you pair it with the relative strength index. So I'm going to go over what exactly the percent range is, what are the pros of using it, what are the cons of using it, and really the ideal way to use this indicator. So the indicator is essentially just a momentum indicator that's an ultra-sensitive RSI, so relative strength index. And instead of 0 to 100, where this oscillates between with the RSI, it's 0 to negative 100. So that is a difference between the RSI and the percent range, as well as other things. But 0 to negative 100 is the percent range. 0 to 100 is the RSI. So just want to point that out up front there. That is definitely a big difference when comparing the percent range and the RSI, as well as other things as well. And the percent range is essentially an indicator that shows the last closing price relative to the highest and lowest prices in a given time. So that given time is usually, or always, the look back period that you're using. So I am always using a 10 period look back if I'm looking at the daily candle, because there's 5 trading days in a week. The default is 14. I like to use 10 because it's essentially looking back 2 weeks, 5 trading days in a week. 5 times 2 is 10. So you can definitely use other look back periods, i.e. the Williams percent range 10 or the Williams percent range 14. And if you're on the daily candle, you're looking back 10 candles. If you're on a 30-minute candle, you're looking back 10 30-minute candles. So it just depends on what time frame you're on as well. I personally have found the Williams percent range to be most useful and a lot less of a false signaling indicator when you're looking at it on longer time frames, such as the daily, the weekly, or the monthly candle. So using this, or really any indicator in a lot shorter of a time frame intraday, you can have a lot of false signals, and this is actually an indicator that does give a lot of false signals. So that is something to consider. That is definitely not a great part about this indicator, but that's why you definitely want to pair this with something like the RSI, where you can get a confirmation of a signal. Now, what I have on the chart here is I have some pink lines. On the price chart, we have downward sloping lines. On the Williams percent range, the blue lines, which is above the RSI, with the RSI is the green oscillator, the Williams percent range is the blue oscillator. I have downward sloping lines on price and then upward sloping lines on the Williams percent range. Now, the Williams percent range can really be used by itself, but as I mentioned, especially on lower time frames, it can give a lot of false signals. So a lot of people think of the RSI. When the RSI becomes oversold, you buy. Well, the Williams percent range is a momentum oscillator that is extremely sensitive, and actually most of the time will become oversold before the RSI, or overbought before the RSI. And generally when the Williams percent range becomes oversold, but the RSI is not oversold yet, or opposite, where the Williams percent range is overbought and the RSI is not overbought yet, generally you can actually have more upside. So for example here, this is a great example. Currently, this is we're in October 10th, it's today. Notice here how you have the Williams percent range becoming overbought, and it actually became overbought yesterday. But notice how the RSI is not overbought yet. So anytime you have the Williams percent range becoming overbought, a lot of the time it's not overbought. It's just signaling that momentum is extremely strong. And then the RSI, once the RSI becomes overbought or oversold, that's your signal where things may be getting close to a reversal. And that's where the RSI comes in. The best way to use the Williams percent range is for divergence. So divergence is essentially when price is doing one thing and the Williams percent range is doing the opposite. In this case, I'm looking for positive divergence, where you have the RSI, the Williams percent range showing higher lows here, shown by this pink line here. And then you can see here on price, the closes are getting lower and lower. So price is closing lower, but the Williams percent range is actually signaling a higher low. So that discrepancy is called divergence. And you can have it on both sides, right? You can actually have it on just the opposite. You can have it on whenever the RSI is overbought, but then you have the Williams percent range showing divergence. That can be a sell signal. So you can see here, price is going up. Williams percent range is having lower highs. So divergence can work both ways. This isn't just a positive divergence video. I mainly highlighted the positive divergence just to show how it works, and it literally works exactly the opposite here on overbought overbought conditions. So you can see here you have divergence, but really the biggest signal here is when you have the RSI also oversold. So these boxes here are pretty much when you are below 30 on the RSI. So when you have positive divergence forming on the Williams percent range and the RSI oversold, that is an extremely high probability reversal indicator. And there's not a lot of times where you have this signal. You can see here that we're looking back over a year, and this signal has only happened 5 times. So this is something that is not going to signal every week or every month. This is actually a pretty rare signal, but it's a very high probability signal for at least a short-term reversal, and sometimes you have even longer-term reversals with this signal. So as I mentioned, you're really looking for the RSI to be oversold, and then you really want to point out, okay, we're having higher lows on the Williams percent range, lower lows, or even closes. Sometimes you can easily have divergence where you're not necessarily hitting a lower low. In this case, you did close at a very slight lower close here back in October of 2022, which signaled the reversal. But you can use divergence either with flat closes, meaning that you didn't close any lower, but you pretty much closed exactly at the previous low. So anytime you have a flat line with an upward sloping line like a Williams percent range or even the RSI, that's also a form of divergence. I prefer to see divergence where you have lower closes, but you can definitely have closes that are pretty much flat from the previous close and having the Williams percent range showing higher lows, especially when the RSI is oversold. So this is really the correct way to use it, because there's so many times where the Williams percent range will move into oversold or overbought territory, and it's a false signal. So really, this is a divergence indicator. You want to identify divergence on this indicator, and there are going to be times where you have divergence. For example, here, and you have a higher low on the Williams percent range, and you have a reversal. So that you don't always have to have the RSI to be oversold as well, pretty much below 30, to have a signal with the Williams percent range, but it's a much stronger signal when you're using the RSI and the Williams percent range together. RSI oversold, below 30, Williams percent range also oversold, showing divergence with a higher low on the Williams percent range and a lower low on price. Now, if we look at the opposite here, you can see here that there's a few times where the RSI was overbought. Now, in this particular case, you did not have divergence forming on the Williams percent range. So you're not always going to have this signal. It's not always going to be perfect. Now, if you do look here, there was extremely slight divergence. You had pretty much your close here on August 14th, and then you had a lower high here on, or excuse me, a higher high here on the 17th of August of 2022. So these divergences can be what I like to call mathematical divergences, meaning that sometimes you can't even see it. You really have to zoom in and really just compare the numbers to see if there's divergence. Because sometimes you're not going to be able to see it with the naked eye. Sometimes it's so close, even within 0.5 of being divergence versus not being divergence. Sometimes it's really important to use the actual mathematical numbers versus just trying to eyeball it and see, okay, is that an actual higher low or a lower low? That is really important. So same thing here, as I mentioned with overbought. RSI is overbought. Price is hitting higher highs here. Williams percent range is hitting lower highs. That's your divergence. And then there's your reversal. So these divergences can play out for quite some time. It's not like you're going to have a divergence and in 2 days you're going to get a reversal. Sometimes these divergences can occur over 2-3 weeks. And that's why it's important to use both the RSI and the percent range together to eliminate some of these false signals. And that's definitely a problem with the Williams percent range, but it can definitely be a lot more accurate if you're using the RSI, and even if you throw the MACD in there too, to get a couple indicators confirming whether this is really a potential reversal in the market. You don't want to use 10 indicators on the chart, but sometimes using 2 or 3 can help smooth out some of the indicators like the Williams percent range that are extremely sensitive, and then using an RSI that's a little smoother than the percent range and really giving you a better signal. So hopefully this video was helpful in understanding the advantage of using the percent range, especially when using it with the RSI. It is an indicator that you really want to search for divergence. And really, it's a great indicator if you use it correctly. One of the biggest problems with indicators in general is a lot of people don't know how to use them correctly, and they start using them in the wrong way, and they get burned. And so being able to hopefully understand a little more about how this indicator can be avoided with false signals, hopefully this video and other videos down the road that we do touching on different indicators will give you more confidence in using lower indicators, which are essentially oscillators or anything that's below the price chart. If you enjoy these videos, please like and subscribe. Remember, I did this video using Optimus Flow from Optimus Futures. And if you have any questions, feel free to comment in the video comments below. And hope you have a great day in this video, and hope this video was helpful.